Hey guys, how you doing today? Hope all is well. So today's video is going to be a little bit different than usual, but I will go over some price action a little bit later in the video. But yeah, so that's it. So let's get right to it here. I'm quite tired today. I don't feel myself, and I think a large part of it is due to the fact that I haven't been following my normal workout physical activity regimen. And obviously that's due to this quarantine that is in effect here in Canada, US, etc. And it's pretty not fun because I'm used to working out at least 4 times a week and I lift pretty heavy weights at the gym. And well, when you don't do that and your body's used to it, you can go through what is called a withdrawal. And as weird as that sounds, yes, your body can be withdrawal to also positive habits like working out. So I've been trying to compensate by doing calisthenic workouts and stuff like that, but it just doesn't work. So definitely my mind and body are out of whack a little bit. So today I woke up very out of it and I had a coffee in the morning and I felt like my body reacted to the coffee but my brain remained asleep. So definitely not a good day for trading, and I did paper trade a couple of times, counter the trend of the SPY, and both times it failed. So we'll go over those trades very briefly here. So right in front of me I have the charts for the SPY, the financial sector, and the technology sector, which in my opinion are the two most important sectors, the SPY being the ultimate of the two. But basically the XLF and QQQ are the two biggest holdings of SPY. So you just need to know that. If you're trading SPY, it really helps to watch the financial sector, okay? Because it can give you clues as to what is the most likely scenario to happen, right? If the financial sector is not losing its 5-minute trend and the Qs are losing their 5-minute trend, it makes sense to say that the SPY is going to potentially lose the 5-minute trend. But if they're both losing them at the same time, then it significantly increases the odds, okay? So that's how we look at it. All right, let's go over these trades real quick here. 946 and 949, I got into some long puts on the SPY here. And I'll bring up the 5-minute chart on the SPY just so you can see. So 946, that would have been, so you can see this, the way it sets up on the 5-minute time frame for a nice reversal right there. So you can see big bull reaction straight into the bears, and then the bears all get stopped out after that. That's just how it is. And I was in this, I was part of the bears getting stopped out. So I stopped out the trade, I believe at 952, 954. Once we saw two bear breaks with no follow through, I was out of that trade. So you can see here, I bought at 946, bought at 949, and I sold at 955. And then I tried again at 1034, and I was out of the entire position at 1104. So I was trying around here near the tops here where we saw breaks close to the highs of yesterday. So I'll mark in the high of yesterday real quick on the 5-minute chart. It was around 256.35, and once we tested that level, you can see this is how it reacted, where we got an initial pullback and then a second test and then a stronger pullback, second test above these highs, and then a stronger pullback. So you can see that this is the consolidation that we got. So it makes sense that a lot of bears are going to try to short this, top fish this play, and me included. I tried to do it and it failed, but basically I shorted below this right here. So once we saw this kind of big bull bar followed by a bear bar, that was when I started to get interested in a short. Okay, so we broke below this level but didn't get much follow through, and that created a sort of a dip buy for the bulls, for anyone who wanted to trap out shorts. But it wasn't a high probability because again we're right near the highs here. And of course any dip buyers got trapped on this candle, and then we got inside bar, and that's just a red flag. When you see two inside bars like that, or three inside bars, it's just a big red flag, and it just means shorts are getting trapped out. And as you can see, look, we just chopped around after that quite considerably on relatively low volume, and then just moved higher. SPY wanted to move higher. The money flow is coming in up, in the up direction. It's coming into the market, into equities. Okay, I don't care where the money's coming from. I don't care whose money it is, but the point is that the money is coming in, and that's what we need to be aware of. Okay, so as a trader, that's why I say trade with the trend. But obviously, I don't listen to my own advice because the only trades I took today were counter the trend because I'm betting on a reversal. So yeah, that's pretty much the trades for today. So I stopped out. I believe it was on this second inside bar here where I got tired of it. Another thing to note is that the puts were just not in demand for a large part of this, okay? They kind of, sometimes they were in demand, but a lot of the time they weren't. And basically, so if you bought, there's a high chance that they were going to decrease in value soon after, okay, because the demand was not strong for those puts, because the upside, there was obviously more upside than downside in these markets, okay? So stick with the trend, obviously, and in hindsight, it's easy to say that because we're in a bull trend day. But this was a reversal trade I tried near the high of the day and it failed. Didn't even manage to take a partial on that trade. And obviously, since I'm paper trading, it's even harder to get fills in and out of positions. So I just let it be and I cut it with a market order after that. And that was the story, all right? I've been having some issues with Trader Workstation and just the way I fill orders and stuff. Generally, the problem is with the SPY and with the Apple options. Whenever you try to chart a SPY or Apple option contract on TWS, it always glitches out and messes up the chart. So there's a huge problem there that I'm trying to get around in my own trading personally. So I've been trying to set my hotkeys to my option chain, set my hotkeys to anything else but a chart. And so far it hasn't really been working. Overall, it's been glitching out quite a lot. And yeah, so guys, trade with the trend and stick to your guns. And yeah, I'm really tired today, so I'm not going to be trading anymore. And I think it's important as a trader to just realize when you're out of it. I woke up this morning and I was out of it to start, and I knew that I wasn't going to be trading anyways, obviously since I'm taking a break from live trading, but I just don't feel like I'm in connection with the market. And that's not a good place to be as a trader, you know? Trading is labor intensive. And if you're not there, and if you're not in touch with your body, if you're not in connection, then there's no reason you should be trading. You should not be trading. You need to be all there. 100% of your game needs to be on point all the time, guys. So that being said, I'm going to leave it there for today. I wish you a great day. We can do a bit of brief price action on the SPY. So again, bull trend, 2 pullbacks here. Look, I'll even put the replay on starting from the beginning of the day, okay? We'll just look at 5-minute bars. So 5-minute bars, let's go. First bar, we have a bull bar. Second bar, bull bar. Third bar, bear inside bar. So you bet that bears are going to try and take a short on this. But if the bears are wrong, then buyers better place a stop buy above these highs, okay? So you can see bears are trying to short below this. Now, they're going to keep their stops either above here or above here. So it makes sense that if buyers are going to come in, they better put their buy stops above there or try and buy the dip against these. So you can see there's a strong bull candle reversal. And we break the high of the day. All the shorts are now stopped out. So we set up a short here, which failed, and the longs are now making money. Here again, another bear inside bar. Shorts are trying to short it here, betting that this is going to be a bull fake out and then a reversal. And what exactly happens is they're wrong and the bulls come in, and anybody who entered bearish here is now wrong and they have to cover. Same thing again, another bear inside bar, except this time it was stronger. So maybe the third time they're going to be right. Maybe the third time here on this 5-minute bar, these bears are going to enter and they'll be right. The reversal is definitely going to be here. Wrong. They get stopped out again. So you see the pattern that's occurring here, guys. What drives markets higher? It's one side of the trade being under pressure. And that's always how it is. And these setups always set up that way. It's literally a trap. Everything is a trap in these markets. So here we go, another thing. So you have a bear reversal candlestick right near the high of yesterday. So now we're setting up a potential bearish entry based on the high of yesterday. So it makes sense that bears are going to try and enter this. So bears enter here with their stop above 258. Okay, if they entered that, let's see if they made money. Okay, more bears are going to enter on the bear break of this bar. And what happens is they're under pressure again. Did they get stopped out? Not necessarily, because we didn't break the high of the day. If they placed their stop right above that bar, then yeah, obviously they got stopped out. But if they placed their stop above the high of the day, they did not get stopped out at that point. Okay, what we got at that point was a two-legged pullback, or like a bear kind of almost trend change, but the bar closed near its high here, signaling that there's still buying strength here. What we got is that anybody who bought on this candle is failing. So it's setting up the bears to show something. The bears are trying to prove themselves here with this two-legged pullback to the moving average. Now, generally, if there was a lot of pressure on this side of the trade, any longs who entered here, here, here would get stopped out. But I think now that looking at this in hindsight is that since so many traders were probably trying to trade against this trend here, 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 and here, it makes sense that if we were going to see a bear pullback, there wasn't going to be that many long traders to stop out their positions, because the majority of that was shorts covering anyways. I'm just making assumptions here. I'm just thinking based on the price action that that's probably what happened. So you can see here, inside bar. The volume is light, so I don't think the bulls are trying to buy this that much. I think it's just the same slow buying that's been occurring all day. So again, we get a bull break of that inside bar. And again, inside bar again, and bulls. So anybody who tried to short this market all day have just been failing continuously, and that is why the market has been allowed to continue to go up continuously without fear of anything. And now we're just in a bull trend. No stopping the bulls today on the 5-minute time frame. And that's just how the cookie crumbles. So guys, trade with the trend. Give the benefit of the doubt to the trend. Trade the price action you're seeing on the chart. Trade with the institutions. Whatever they're doing, do what they're doing. If the institutions are selling, you sell. If the institutions are buying, you buy. That's it, okay? So you need to be all there, all there. If you're not in connection with yourself, your body and your mind have to be at one. If they're not in connection, don't trade. Just don't even do it, okay? It's not worth it, man. So I wish you guys a great day. Enjoy yourselves. Take care. Bye.